This is how we were able to make 300% today on IWM puts. So as you can see here, I have the 1-day chart, so each candle represents 1 day of price action. And last week, Monday and Friday, we fell into this purple zone that I have drawn on the page. Now, if you could drop down to the lower time frames, you start to see how we break down. So first of all, the 4-hour candle from yesterday was an inverted hammer candle, ended up falling into this purple zone. Drop down to the 1-hour time frame, you can now see what exactly we did with this trade. So there's a little bit of consolidation within its own zone on the 1-hour time frame up here. Now, if you drop down to the 15-minute chart, you can see exactly where we fell into this zone and started falling lower and lower and lower. Now, what I want you to highlight is the EMAs. The EMAs cross to the downside. You have the orange line crossing over the red line, so that's the 21 crossing over the 50 to the downside. And then you also have the green crossing below the 50 here. That's what's known as a death cross, and obviously in this case, it is a bearish indication. So here you can see an inverted hammer candle and what some would call tweezer tops right here, which was our entry on the 5-minute time frame. So I dropped down to the 5-minute time frame now, so you can see our exact entry. One thing to highlight here is we gapped down, stock sold off. We sold off all the way into the zone before we started uptrending again and then got rejected by the EMAs. Now at the EMAs, this was called out for puts. So in this case, if you see a stock dropping and continuing to sell off before consolidating, what you can expect is either a retest of the EMAs to break out and then a reversal, or a continuation of the pattern. Now in this case, I highlighted the blue zone during market hours to see what we would do, and we continued to push up to the EMAs and to the top of that zone before selling off more. So about half an hour into market open, I said my price target was 237. 237 comes from the higher time frame. The higher time frame, that zone ends around 237. That's the bottom of the zone. So obviously, you can see exactly where I got the price target from. Now going back to the 5-minute chart, this is what we trade on when we're doing day trades. You can see exactly what we looked at and exactly how we took the trade. Now here we go. So we got the consolidation before failing to break above the EMAs and a crazy red candle, bearish engulfing candle, which kind of indicated that we're going to go lower. Now, each time we tested the EMAs and tested that little zone where the consolidation was, we sold off even further. Now, to put it simply, on a day like this, it's called a trend day. And when trend days occur, ETFs, index, regular stocks, they all sell off heavily. And on days when they do that, you can see they continue to make lower highs and lower lows. It wasn't until the very end of the day that you saw a little bit of bullish price action with 4 green candles in a row. But by then, you've already dropped about $6 or $7 from the tops to the bottoms. And the thing I want to highlight here is every single time you take these kind of trades, it's important you manage your risk. In this case, sure, the 15-minute, the 5-minute, the 1-hour, 4-hour were all bearish, so it's clearly a put day. But on other days, the price action might not be as clear. And on other days, even if the price action is this clear, there can always be a reversal coming in based off news or whichever patterns appear on the chart.